Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
Welcome to a special edition of Bloomberg Tech live from CES in Las Vegas. We've been bringing you conversations from the biggest names in the industry, and today we have another great lineup. Coming up first, we sit down with Jen-Hsun of Intel's client computing group to discuss the chipmaker's efforts to make its products competitive again.
Plus, Warner Brothers, it rejects an amended takeover offer from Paramount Skydance. We'll break it all down with Paul Pastor of QuickPlay.
We'll be joined by Mobileye's CEO to discuss the company's acquisition of Israeli startup Mentee Robotics in a cash and stock deal valued at $900 million.
The deal's still getting done, but let's check in on these markets, which are being ruled by geopolitics once more. NASDAQ managing to brush that off a little bit more than the S&P. Remember, we're still near record highs on the S&P. We're up another 0.3% on the main benchmark when it comes to the tech names, maybe less affected by what's happening in terms of geopolitics and Russia and the US at the moment out in the seas. But we're currently holding on to gains, Ed.
Geopolitics is always there. I'm looking at NVIDIA. It is the mainstay of this CES week, with Jen-Hsun speaking multiple times. The stock is up almost 1.5% in the current session. You know, there are headlines out right now from the information that China is asking its tech companies to halt orders of H200. Jen-Hsun's been peppered with questions about H200 for the last 3 days straight. And you can see over 3 days, this was not the blockbuster that we thought it would be to start the year. NVIDIA's up 0.5 percentage point. Now, the big data point was the forecast for the next few quarters, Blackwell and Rubin. And this is what Jen-Hsun had to say about that forecast.
Hopper pricing is actually going up in the cloud. All of the hoppers are consumed in cloud, and now spot pricing is starting to go up. And so that tells you about the demand that's being generated all over the world. So H200s, I think, is going to contribute also to that. And I think all told, I think we should have a very good year.
That question was posed to Jen-Hsun by Bloomberg's Ian King, who's covered semiconductors here since 1998. And the context is that you said to him in October, you told us over 5 fiscal quarters, $500 billion of sales across Blackwell and then Rubin. Is it possible that that number could go up? And as we just heard, there are various reasons why Jen-Hsun thinks that number could go up.
Yeah, I mean, fundamentally here, all our audience care about is, are we in a bubble or not? And they just want any piece of information, any hint to explain, well, why we're not. And obviously, what he was saying was there's lots of things going on. There's new models, there's new areas of the economy that are coming into AI, and all of this means that demand is actually better than I thought it was. So that number is looking like it's a bit low. So that was good news, but nobody got that excited about it.
Where they did get excited is memory storage. Oh my goodness, SanDisk is up 1,000% from its lows. It's up 50% in the first 3 trading days of the year, Ian. What are you hearing in terms of this demand for memory and the price point that we're going to see? Yeah,
I mean, as always with the memory chip industry, you either got a feast or a famine. At the moment, we're in a famine. When we're in a famine, the price goes up, right? And that is exactly what's happening right now.
Supply and demand is basically what you're teaching us.
Always has been. They can't build factories fast enough. They can't build production fast enough to meet these short-term surges in demand. So right now, the price is going up.
And we're actually talking storage as well, not just the high bandwidth memory that goes around the GPU. A point of discussion on the internet has been autonomous driving.
Yeah.
Once again, NVIDIA came out strong with autonomous driving. You and I were sat next to each other in the keynote, and you can tell us about NVIDIA's offering, but it also caught the attention of Elon Musk and Tesla, of course.
Yeah, I mean, there was a little bit of a backwards and forwards between Jen-Hsun and Elon about, you know, whose system is better, and both of them ending up praising what the other's doing in the end, because let's face it, they need each other. But this is the point that we're at. We've been promised cars that are robots that can do their own thing for a very long time. Hasn't happened as fast as we were promised. And what we're being told now is we're at the cusp of this, and this is great if you're making chips, if you're making the components for these vehicles.
Cars, robots, we've seen a lot of them. We're going to continue to see a lot of them. Ian King, we thank him so much for his decades of work in the chip sector as well. But look, let's stay with NVIDIA because, of course, Ed, you sat down with NVIDIA CEO Jen-Hsun and Siemens CEO Ronald Buch to discuss their latest partnership, the expansion of AI efforts. Just take a listen.
We're announcing a big partnership between us. We've known each other for a long time, but the partnership we're announcing is really a big deal. One, we're accelerating their EDA software. We're accelerating their simulation software. We're integrating AI technology, physical AI and agentic AI, into their team center and their factory automation operating system. And so we're working together across this entire spectrum. When we accelerate the software, then we'll get to use it to design our chips and systems. When we accelerate their simulation software, we'll use it in our AI factories to simulate the thermal properties of our AI factories. When we integrate our automation and agentic systems into their AI industrial operating system, we can then use it in our factory floors with our partners, for example, Foxconn. And so we're working across this entire spectrum together, and we're going to put the technology to use basically as soon as we can.
What's the net effect for you, Jen-Hsun? It improves margins, efficient capital allocation. I know that might sound a bit dry, but actually right now that's the answer everyone's searching for. How has this investment in AI and use of the technology actually changed things in the real world for me?
Well, we announced yesterday Vera Rubin. It takes 6 different chips to integrate into this incredible system called Vera Rubin. And when you're done, each one of these Vera Rubin GPUs is 240,000 watts. And it is 10 times more energy efficient than the last generation. It is 10 times more cost efficient than the last generation. But it's still, the technology is insanely complicated. 15,000 engineering years came together to build this system. And so when we accelerate EDA tools, when we accelerate simulation tools, and when we can eventually, and I'm hoping very soon, design entire Vera Rubin systems inside a Siemens digital twin, the ability for us to create much, much more complex systems will scale. We'll do it much more efficiently. And so this is really about being able to do the impossible and being able to do it the impossible right the first time.
And let me add, once we then realize that AI creates real-world impact, this is where it really deploys the full power and also the economic power. It's not only in the data centers or in AI factories, which we see, but also on the edge, because once you start inferencing with low latency, you bring this technology to the edge. There's a huge potential for our customers to deploy this technology, and this includes, of course, hardware, where we come from the chips. It goes into the controllers. Some of our controllers run on GPUs.
Yes.
And then it goes all the way to the hardware.
Industrial PC.
Exactly.
Yeah.
And we
now these industrial PCs are AI industrial PCs.
We supercharge it, and they can now run algorithms trained in the cloud. They can run it on the shop floor and do all that trick, what we talked about it in real-time optimization and running in a plant, and that makes a huge difference.
NVIDIA CEO Jen-Hsun Huang and Siemens CEO Roland Busch, they're starting their own industrial revolution is how they put it. Coming up, Intel looks to gain a competitive edge with new computers and redesigned processors. We speak with Jim Johnson, Intel Client Computing Group SVP and General Manager. That's coming up next. This is Bloomberg Tech.
Intel is here at CES with a slew of new products from laptops to newly designed chips, and it's part of an effort to be more competitive across its product lineup. Joining us now, Jim Johnson, Intel Client Computing Group SVP and General Manager. And the way you would describe it is the vibes are good? Like, yeah, people are feeling positive about what you're unveiling?
Yeah, it's been a long journey to get here. And finally launching, what we think is the most powerful mobile processor for mobile computing with our new process node 18A. It's something the industry's been waiting for and wondering if we would pull off.
Okay, for those that aren't deeply within the industry and coming to your foundry and understanding what's going into this new processor, the Core Ultra Series 3, what makes them different?
We took our most powerful mobile processor from last year and built it on the most power efficient mobile processor from last year, combining those two capabilities. And so we run workloads from last year at 40% lower power this year on this processor. And it's I've been asking, knowing I've been coming here, I've been asking our customers, what would you say? They'd say super powerful, surprisingly power efficient. That's what they told me last night.
So here's the thing, Jim, and with respect, AMD and Qualcomm's customers would say the same thing. You know, AMD and Qualcomm have already been out there this week saying that their processors and parts, best battery life, best performance, and they both argue that they're taking share, right? What data points can you point me to that would evidence Intel's back in the lead in that market based on this technology?
I get asked quite often, what's the killer app for an AI PC? And up until this part, I didn't have an answer. But if you're into mobile gaming, we built a GPU in Series 3 with an AI capability called multi-frame generation. Okay. So you would typically render a frame and then render a frame. In between, you can now use AI to do multi-frame generation. It's quadrupling the frame rate and super smooth play. So I would take that system up against any of our competitors if you're into mobile gaming.
But is Intel in the lead?
I believe so, yes. 2026
is fascinating, bigger picture. You have some forecasters, I think IDC, saying that the market will shrink 9% this year. You have others saying it will grow literally because of AI PC. What is your kind of forecast? And you know, it comes back to the same question we've had at CES for a couple of years now is, does the AI PC resonate with anyone at the corporate level or at the consumer level?
So a couple things. So that is part of the conversation we're having this week, but the feedback I keep getting from our customers is keep ramping supply of these new processors because they believe they're going to win with them.
Right.
And from an AI standpoint, another thing that's happened, because we've been deploying AI PCs now for 2 years, we have the equivalent of 40 data centers worth of compute on the edge. And now we have, like Arvind, the CEO of Perplexity, came and did a talk with me, and he's now figuring out with us how to run portions of his Comet browser directly on the AI PC for 4 reasons. He sees better performance, he sees better security and privacy, better cost, but for more importantly, more control. So for business, they have more control. So I'm seeing these big AI companies actually start to tap into what can they do more locally. Same with, so I guess another thing that's happened is edge computing. I know you've been talking about edge computing between cloud and PC. We used to sell these parts maybe a year or 2 after we launched them into factories and so forth. But because the Series 3 processor is really good at perceiving the environment with our visual processor and doing motor control of factory equipment and robotics, we have demand on day 1 for Series 3 from edge customers.
So let's talk about the supply. Because you have got vertical integration. You're actually using your foundries. You are printing the silicon.
Yes, and we're building capacity specifically for client. And that's a real value proposition for our customers because they can depend on us to keep supporting our product lines for them.
But in a way, you are the client of your own Intel foundry.
Yes.
Why did you go with them, not TSMC? What turned you to think, okay, these are the ones, this is the supplier I need?
There's 3 things that they did with 18A that it's really impressive. They used the latest EUV technology you can buy.
Thank you, ASML.
Yep, that's right, that's right. And they did 2 new unique innovations. We call it ribbon FET, or gate all around, and backside power delivery, so you can separate power from signals. We get 15% better performance per watt, and multiply that times 20 or 25 watts in a PC, and we have 30% better chip density. And so that allows us to compact our design, which allows our customers to compact their design and put in bigger batteries. And so they're now driving all-day battery life to multi-day battery life.
Jim, I think we have to end by talking about pricing. You know, the background is that memory is an issue at the moment. How do you manage it? Do you pass on the cost, or do you weather the storm? Feast and famine, cyclical memory problems. You've been around, right? With respect,
it's a conversation we're having this week.
Conversation or an acknowledgement that it's a problem?
Well, it definitely is an issue in the industry. Our customers are struggling on what they're going to do with it, and they haven't decided yet. But what they're asking us to do is keep our build plan solid, because in 2026, they see a chance to really gain share on the back of Series 3.
We just have a few seconds. Does the PC market grow, stay flat, or shrink in 2026?
I think it's going to be plus or minus where it's at. Now, some people are much more dire than that, but we had the same conversation when tariffs came up. And all the predictions, whether really drastic or big pull-ins, they kind of didn't come true. There was something more in the middle. So we're planning for more in the middle, but of course we'll react with our customers as we need to.
Jen-Hsun, Intel Client Computing Group SVP and General Manager, thank you so much. Now, coming up, a conversation with Qualcomm CEO Cristiano Amon on why robotics is the next big thing in AI, and they're not alone in that. This is Bloomberg Tech. Robotics is the next big opportunity in AI. That's according to Qualcomm CEO Cristiano Amon. Caro sat down with him here at CES in Las Vegas yesterday. Listen to this.
Yes, look, we're incredibly excited about this. This is a new chapter, I think, of the Qualcomm expansion and diversification. I think we're going to robotics. We like robotics a lot because, by definition, it's an edge AI problem to solve, not different than what we did in automotive. You cannot put a server in a robot. You need battery life. You need a lot of integration of sensors. And physical AI is a massive opportunity, and it's an edge AI opportunity. So, as we look at this transition of Qualcomm into new industry, we went to automotive, to PC, to industrial, to data center. Now robotics is the next opportunity. We actually have a number of robots that here at our booth at CES demonstrating training, humanoids, industrial. I think we started the year working with some great companies, German, KUKA, Figure AI, and I think it's going to be a great opportunity. In robotics, it's perfect for you to have high-performance computing and low-power connectivity is an edge AI problem, and I think it's going to be the next big wave of AI, physical AI.
How soon is that reality? Already we have robots in manufacturing and industrials, but how soon is it fully autonomous robots? How soon do we start to have the humanoid versions in our houses?
Look, the way we think about this is things that you didn't thought were possible to do with a robot, you can do it right now using AI. I think industrial robot is the largest opportunity that we see in front of us, and it's probably starting as early as 2026. When you use AI to train a robot on one given task, it's a very well-defined problem, and you can do this and you put it into production. Consumer robot, the one that is going to be in your house and do everything for you, it's going to take a little bit of time, but it's going to happen, and it's going to be a big opportunity. I like to do this parallel that we saw with automotive. When we start talking about autonomous cars, a lot of companies went in and said, we're just going to get this full autonomous robotaxi. But until you get there, you can do assisted driving to every car on the road, assuming that the driver is there to pick it up. And we've seen ADAS level 2, level 3, highway autopilot, that's what we're doing. I think the same parallel applies to robotics. First, you have a lot of enterprise and industrial applications. We see companies, for example, in retail, at night, robot, go to the aisles of the supermarket and restock the shelves. Yeah. Something very simple. That opportunity is happening right now. Over time, we're going to have the domestic robot that will do everything for you.
Qualcomm CEO Cristiano Amon there, trying to be a little bit more realistic about how soon we're going to have humanoid robots in our homes. But robotics is one of the key themes that everywhere here in CES right now. Bloomberg Sam Kelly, she's been tracking them on the shop floor, shall we call it. And Sam, I mean, everywhere you look, there's a humanoid. Is that your vibe? And is everyone taking that form factor?
Yeah, it's so funny. Yesterday I was walking around. I saw one playing ping pong. One made me a latte. There was a chess robot. And some of them are on the enterprise side too, showing what it could be like on the assembly line. But yeah, humanoids in particular are really big this year. We saw during a keynote, LG had its Cloyd robot come out, folding laundry, lots of laundry folding robots as well. And I think it shows one thing that's really interesting is before a lot of these were in controlled experiments. Of course, that's still happening, but companies are now coming out and doing more live demos, which shows a little bit more confidence. A lot of growth also. We've seen some challenges around hand, finger movements. Legs is another challenge. Yeah. So certainly challenges ahead.
Dexterity. I mean, when we were speaking to Jen-Hsun Huang yesterday, he labels this the ChatGPT moment for robotics, right? But there are still challenges.
Oh, yeah.
Is there an acknowledgement here on the showroom floor that we aren't going to see these robots in our homes tomorrow necessarily.
Yeah, I mean, I think we can see that just by sometimes looking at a demo, and it might take a while, or even with LG, the robot was doing the laundry, but it took a long time. It was a little painfully slow. So we're certainly not there yet. And also just to have it in the home, you have cluttered homes. Homes are unpredictable. You have to be really careful, especially with humanoids with legs. You don't want them falling. So we are certainly this is not happening anytime too soon.
And that's what this is about. This is about pushing forward the innovation,
Yes.
thinking what's coming in the next decade, maybe not the next 10 months. But Sam, what are you seeing in terms of health and wellness? Because I'm hearing a lot about robots, perhaps there for mental health or caring for the elderly, but you're seeing a lot of other areas where health and wellness is going.
Yeah, exactly. Different form factors. So we're all familiar with the smartwatches and the smart rings, of course. But now, yesterday, I saw a toothbrush that predicts signs of longevity, whether you might be more likely to get a certain type of disease or kidney issues from a toothbrush, because of saliva is actually a little bit more of a predictor than just like the skin.
Diagnostic.
Yes. So the different form factors like that. I saw a longevity mirror that analyzed my blood flow to predict maybe perhaps signs of either hypertension down the line or other heart health, things like that. Also a smart night guard. So people who grind their teeth at night, in addition, it'll like nudge you so you stop doing that. But it also, again, with the saliva,
in your sleep,
and it'll predict issues, long-term issues with your health, but also it'll tell you how well you're sleeping, sleep tracking, sleep apnea, things like that. So different types of health, it's coming into different form factors.
Sounds super quick. You've been to many CES.
Yeah.
The vibe relative to prior years.
Yeah, it feels like exciting, to the point of like a ChatGPT moment. People are really excited to be here and show off different new things. And I think there's, who knows what, this is a testing ground. Who knows what really is going to happen? But there's definitely a level of excitement for sure.
You've got to check out what Sam's been writing about on Bloomberg.com, right, Kara?
Yeah, and you're going to have a big conversation later. It's all going to be about health, wellness, aura, and particularly about how this goes in sync with the FDA, right?
Yeah.
When you think about health.
Tom Hale, Aura CEO, the Ring wearable. I'm not an Aura wearer, but right now they have a lot of questions about how they go beyond, particularly a female user base. All to come. Bloomberg Sam Kelly, thank you. Coming up, we've got a big conversation with Mobileye CEO Amnon Shashua after the acquisition of a robotics company, Mentee. It is halftime. We are in Las Vegas. This is CES. Stay with us. This is Bloomberg Tech.
Welcome back to Bloomberg Tech, a very special edition live in Las Vegas for CES. Let's take a look at these markets because, look, we are being ruled to a certain extent by fresh geopolitical tension, but not the Nasdaq 100. We remain in gains, up 1/4 percentage point. Yes, there's all eyes on memory makers. Yes, there's all eyes on Nvidia and AMD post some of their announcements. But we want to put all our eyes on one particular stock right now, Ed, because Mobileye yesterday had a pretty key announcement, a new deal. A deal to the tune of $900 million, combining cash, Mobileye shares, to buy Mentee Robotics. And the deal is expected to be closing in the first quarter of 2026. We're still in gains, up 0.3%, but we're significantly off of our highs as the market digests what this deal really means. We've got the perfect person to be asking what it means. Amnon Shashua is here with us. Mobileye CEO, it is wonderful to have some time with you, sir.
Wonderful to be with you, Caroline and Ed.
Why is it right for you to go from autonomous driving into the world of robotics?
Well, Mobileye is an AI company in the field of autonomous driving, driving assist, the full spectrum of computer vision and AI to control cars. And humanoid robotics has been recognized in the past 2 or 3 years as a complementary domain. And Mobileye wants to, it's not only another growth engine, but from a technological point of view, if you are an actor in this area of physical AI, you want to then extend it to the full scope of physical AI. And I believe that robotics, humanoids, they have a great future. Now, maybe it's a long-term play. It's not, a year from now, but I believe it has a significant, exciting future. And for Mobileye, there's synergetic areas in infrastructure, in AI, in software, in AI talents. So for Mobileye, this is a great move.
I mean, of course, in many ways, people would say you'd think that because you helped found Mentee,
it's true.
your son's work. at Mentee.
Yeah.
Help me get comfortable with that, because many have thrown such accusations Elon Musk's way sometimes in previous acquisitions and not liked it.
Well, it's called a related party transaction. Has been done in the past and will be done in the future. And there are ways to handle it, like being recused from decision, which I did, and so forth. And you know, my son has a 0.00001%. He's just an employee, so it's not a big deal. You know, he graduated from computer science, and he wanted to do some work and you know, go work for a company that is very, very strong in AI, working on the future of physical AI. So it makes sense. But you know, that is really immaterial. The material part is the scope of AI. You know, physical AI includes humanoids, includes autonomous driving, and it makes a lot of sense. You know, Mobileye, over the years, was always looking for a new growth engine.
Yeah.
Right.
For example, take computer vision and apply it maybe to security areas, in cameras and so forth. But we never found something that really clicked. Found something that has significant moats, that has a significant TAM. And humanoids is becoming that click, is becoming this area where you can grow.
You and I have been talking for years about you know, Mobileye's existing footprint and then its go-to-market in the future. What's the go-to-market for Mentee?
Well, we see the go-to-market in two phases. The first phase is structured environments, like warehouses, assembly plants, retail, where the number of tasks are finite, are also understood in advance what are the tasks that the customer is interested. A customer will buy a fleet of robots, not just one robot, and you can customize per customer. That, I think, based on POCs that Mentee has been doing, if you look at the demonstrations that have been showing, like robots picking boxes, moving them from place to place.
You would essentially just sell the hardware?
Sell a robot, either sell or lease a robot. Right? We believe that the manufacturing cost in a reasonable volume of tens of thousands of robots would be $20,000. So this gives a lot of flexibility in a business model. So this is phase one. We believe it will start in 2028. Phase two is unstructured environments like home use. That is much more complicated because the tasks are open-ended.
Right.
You need to continuously learn. So it's not that you can prepare yourself to all the possible tasks in a home use. So you need new technology. So it's not that the same technology you use for structured environments. And this is one of the things that I showed in my keynote, a technology that Mentee, and this is why Mentee is called Mentee, from mentoring. The robot is passively watching a human showing a new task. And the video goes up to the cloud. In the cloud, there's a foundation model that takes the video, moves it into a simulator, trains over the simulator. Today, it's a few hours, in the future, a few minutes, goes back to the robot, and the robots perform the task.
Let's go back to your core business, Amnon. This week, NVIDIA showed us a full stack solution for autonomous driving. You know, they make arguments that their software and hardware competencies will make them win. Your evaluation of what they're offering against what you plan to do, cost per mile basis, how worried you are?
I'm not worried. Competition, I believe, is always good. It kind of ignites the market. In my keynote, I had Christian Zenger, the CEO of Volkswagen Autonomous Cars, chairman of Moya, come to the stage and talk about 100,000 vehicles in the next 8 years, 100,000 robotaxis in the next 8 years. Talked about that we are almost there in removing the driver, going driverless in Q3.
Yeah, but are they using Mobileye?
Yeah, of course.
Ironclad?
Ironclad. This is Mobileye. There are 100 ID bus vehicles in multiple locales. All of them is Mobileye stack. And we are really on the way of removing the driver and a very cost-effective solution. Our sensor set is, you know, $10,000, $12,000. Compute is very, very cost optimized. Mobileye's chips are 1/10 of the cost of competing chips. We developed our imaging radars, which are the best on the planet, those imaging radars. So I feel very confident that we are on our way to a new growth engine with the robotaxis.
Well, you're striking deals. We understand there's a US automaker that you struck a deal with for 9 million cars for safety software. Who is that?
Okay. US automaker. There are 3, 4. No, pick one.
Oh, come on, just the name.
It's that simple.
But I think that This 9 million units is a big news because we're talking about the evolution of ADAS. So ADAS today is a front-facing camera. Maybe you have a front-facing radar. This 9 million units is called surround ADAS. You're taking a front-facing camera, 4 parking cameras, multiple radars, a very strong value proposition to the customer. And it replaces multiple ECUs in the car. It replaces the ECU of a parking, ECU of a driving monitoring system, hands-free driving on highways, safety functions for the next 5 years. So this is the evolution of ADAS, and it's high volume. We have 2 customers in the past year, Volkswagen and this US customer, 19 million units. This is big.
AI 21. We're hearing that NVIDIA, Mr. Huang, is quite interested in another one of your companies. He's here this week. What can you tell us about how talks are going? Did you manage to speak to Jen-Hsun while here?
You know, the Israeli press is not as tight as the US press, so don't believe anything you read in the Israeli press.
So no talks with NVIDIA?
No, there are talks. NVIDIA talks with others, but no, it's nothing even close to talking about it in the press.
How do you think Mobileye investors would feel about an acquisition of AI21 by another player?
It has nothing to do. Right? AI21 is working on foundation models, on agents. It has nothing to do with the activity of Mobileye, activity of Mentee. Mobileye is physical AI.
You're a busy man.
You're a busy man.
And a busy man,
we're grateful for the time here at CES Las Vegas. Amnon Shashua, Mobileye CEO, thank you very much. Now, coming up, we have a whole lot more. We speak with the Quick Play CEO, Paul Pastor, as Warner Bros. Says Paramount's amended offer remains, quote, inadequate. This is Bloomberg Tech. Warner Bros. Has rejected Paramount Skydance's latest amended offer, calling the company's revised bid, quote, inadequate, and urging shareholders to stay the course with Netflix. Here to discuss the state of media and streaming is Paul Pastor, Quick Play Chief Business Officer. Paul also previously held senior executive positions at Discovery Communications and the Walt Disney Company. There's a lot in the sort of structure of the deal that the Warner Brothers Discovery board points out. A lot of it has to do with the debt load of the Paramount deal.
Certainly.
There's something interesting in it that I wanted to pick out, which is we don't agree how valuable cable networks are. So the street and the investors would say, actually, they're much more valuable than you're giving them credit for. Paramount Skydance would say, in our $30 a share offer, we don't think they're valuable. Therefore, the $30 a share offer is a great premium because we want the whole thing. How do we value those networks?
Gosh, was that a great question. I mean, it really is a difficult thing to manage at this moment. We're talking about a really big shift in the ecosystem, right? We've had these traditional channels around broadcast, cable, that have been almost cash cows for these businesses for a long time. Then the shift of streaming and the ability to build those businesses with lower margins, right? But now we're seeing with price increases, advertising dollars moving in, that it's actually a great value. And now a huge shift into this creator economy and thinking about short-form content. And then you have to evaluate those assets against those big shifts in the ecosystem. They still have value. They still spin off cash. They still can be the home for reach and advertising. But the real value has shifted. The advertising dollars have shifted in a new direction.
Paul, I'm going to remind our audience of the state of play, because in a deal like this, you get some fatigue. But Netflix is basically saying, we want the streaming business and the studios will spin out the legacy networks. Paramount Skydance wants the whole enchilada. In your mind, which result would make most sense for the consumer, and what they would actually use those platforms for?
Sure. Well, listen, I think that there's absolute value for the consumer and for the shareholders, most certainly in a Netflix, Warner Brothers combination, right? You have superior storytelling capabilities coming from the HBO Max and the Warner legacy and their entire library, coupled with what is superior tech. Netflix has led the industry in personalization, in driving new features, right, and algorithms. That combination is certainly unique. Now, does that mean that's the best consumer? I don't know. Does the storytelling capabilities that are combined with Paramount, coupled with Warner, deliver more value into the ecosystem in general and for consumers overall who get great enjoyment out of those stories? That's a difficult equation to value, but I can most certainly see there's value in the greatest tech and greatest storytellers coming together.
What perhaps there isn't value for consumers right now is three companies getting caught up in a lot of admin and fighting and regulatory discussions, rather than focusing on the business and innovating. How much is that a risk?
I think this is the biggest risk in any big transaction and M&A activity, right? The focus becomes, how do these companies potentially come together? Everybody internally thinks about, what is my role in this transition? And no one's focused on the fact that they're competing with an ecosystem that is evolving around them, right? We saw that social media platforms are taking over not only viewership, but total ad dollars this year. There is a huge shift into the creator economy. And if you're just focused on how do we put these two companies together versus the competition that is outpacing you with TikTok and YouTube and others, you're going to be further behind by the time you complete this transaction.
And we haven't even discussed AI yet.
That's
and you
right.
think about the big deal that was announced between Sora, so Disney, and OpenAI at the tail end of last year. What is my viewing experience going to be like going forward? When I turn on Disney Plus, what does it look like as a screen?
So I think this is going to be the biggest piece of innovation we see in 2026. So AI for the last year has been about doing discrete projects. How do I create a vertical video? How do I think about leveraging it to help improve the algorithm? But what we've really got to be focusing on today, right, is how do we think about the entire ecosystem? I'm playing in multiple universes. What is that consumer experience like? I believe this year, instead of when you download the app and you hit a wall that says pay now, you'll see in the future people pushing short form content as a way to discover, as a way to engage consumers, a new way to engage a conversation. That data from there begins to inform how I get a cold start. So how do I, when I first go into that experience, how is it customized for me, right? How do I ensure that I'm going to be able to retain that consumer? Then all of those interactions over time also become part of this greater ecosystem that says, now I know what to serve you, how to engage you, how to retain you, and how to reach you on other platforms. And that's really when we begin to think about the value of what AI can deliver when it's managed as an ecosystem.
We've talked a lot about chips and robots and consumer gadgets. I think it would be really helpful to give your kind of media and entertainment experience of what it's been like at CES. Very conscious, a lot of the advertisers are here, very conscious that actually the mode at which you consume that content is on display. What has it been like for you?
Yes, for us, as discussed a little bit earlier, it used to be very discrete investments that we were seeing across the AI spectrum. I think today people are thinking about, how do I look at AI as foundational to the way I operate with my technology and with my consumers? And that's the big shift, I think, in the mindset. And now they're coming to us and looking for solutions that scale at huge enterprise across multiple ecosystems. That's been the big shift for us.
We probably should have done this at the start, for which I apologize, but just what is Quick Play?
Yeah.
So, yeah, give us the Quick Play sum.
Absolutely. So we are a company that basically builds out white label OTT services, so over-the-top television services, all the back end, everything from ingest to the time it ends up on your device. And where we have pivoted, right, is how to actually enable that through AI. How do you leverage those AI tools to ensure not only can I create short form out of long form, respond to social signals that are happening in the universe to be able to say, hey, there's a conversation happening around Bad Bunny appearing on SNL. How do we participate in that conversation with our content to drive new engagement, to drive new retention strategies, to drive new acquisition strategies? But we're also thinking about that entire data fabric to create those experiences that are hyper-personalized.
Well, Pastor, great speaking with you. Quick Play, Chief Business Officer on all things media and tech. But coming up, we're going to bring you part of our conversation with the General Catalyst CEO, Hemant Taneja, and how he sees AI impacting the consumer experience. That's next. This is Bloomberg Tech. AI valuations, a tricky topic, so says General Catalyst CEO Hemant Taneja. That's one way that he put it. We sit down with him here at CES to discuss his views on AI valuations, on whether it's all hype or not, and some potential IPOs down the line. Take a listen.
Valuations are a tricky topic, and I feel like they always prove out to be right or wrong in hindsight. But if you break down the kinds of companies that get funded today, there's a ton of dollars going into a handful of big research projects.
Yeah.
There, the valuation, your guess is as good as mine. It really is about, ownership that's enough to incentivize the teams, because they're research projects. You don't know when they're going to become businesses or if they're going to become businesses. And then there's companies where they're real use cases, applied AI use cases. There, the valuations sound extraordinary at the moment, but the progress happens so fast in some of these companies that they grow into it fast as well. So I think it's a nuanced dynamic, and what's the thing that is confusing for me a lot of times when I look at these companies that are growing is not about are we pricing it right in the context of their revenue or their revenue growth, but much more about are they going to be around? Are the models going to be smart enough to do a lot of what some of these companies are doing and just do it themselves, or are there applied AI? Which applied AI companies will be durable on top of the LLM innovation that's going on?
Anthropic, you're in.
Yes.
That's durable.
Yes, yes. And look, first of all, Anthropic is I have a lot of respect for Dario, what he's accomplished, and the team there. It's durable. They've built a great set of models. They've been very capital efficient. And the thing that's interesting is they also have an amazing set of use cases on top that are taking hold. So it's not just the model company, it's also applied AI, right? Claude. It's really redefining the engineering department. And just think about the size of that market, the amount you spend on tools and engineers to be able to build products. And the amount of progress is like Silicon Valley companies now code self-writes for most of what they do. I think it's a real transformation of what cloud's really enabled.
I know you're very passionate about the democratization of access to some of these companies. Look, Anthropic might go public. Is that should it be going public sooner? Should the next round be one that comes to the masses, rather than perhaps going to let another venture or another crossover round where they remain private?
Yeah, look, I think the company has to decide that. But do they have the size and scale to go public in the next 12 to 18 months? I think they certainly can. I think there's going to be a variety of factors they'll have to weigh in to decide when they think it makes sense to be public, when they're predictable enough, because so much is changing in the market itself and the dynamics. It's actually hard to predict growth. When we invested in Anthropic, we modeled a certain amount of growth. The company grew 3 times faster than that. So, we look good in hindsight, but we thought we were just doing a reasonable and in my opinion, reasonably expensive pricing for that round. It ended up being, we look great in hindsight. So it's hard to predict, how these companies are going to scale for a little bit longer.
That was General Catalyst CEO Amnon Shashua. Speaking of IPOs, Discord filed confidentially for an IPO, according to our sources, adding to a rapidly growing pipeline of venture capital-backed tech listings. Caro, you broke the story with our mate Bailey Lipschultz. The details are important, right? Like Discord, it's a platform that I've used, but what do we need to know here?
Yeah, because you're a gamer, and it started a decade ago, and it's really a gaming chat platform that's morphed into much more than that. It's got 200 million users on average on a monthly basis. They've had an interesting executive leadership reshuffle of last year. They've now got an Activision Blizzard alumni as the CEO, someone who worked at King, someone who can really steer the monetization part of the business now, because Ed Citron, the co-founder, has gone over to the board level. But this really does build to this kind of fire feeling of IPO pipeline. We've got Motive waiting in the wings, we understand. There's plenty others in the smaller nature, but we're talking about Anthropic. We're talking about maybe OpenAI.
Discord's interesting. They're like they have Goldman and JP Morgan working on it.
Yeah.
We understand, right?
Yeah.
But last year was better for IPOs in tech than 2024 was.
$15 billion was raised on US exchanges. That was 4 times the amount that was raised in 2024. So can we still tack into basically a higher valuation point, an S&P 500 near a record high? People want to see these companies come, but we've got to work out what valuations they come at. This is a company that raised at about $15 billion in 2021. Okay. 2021 was a very nice year for valuations, right. And a lot of companies are having to swallow some. Think of Figma in many ways. It managed to have a blockbuster IPO, but still it was always being marked into previous rounds.
Private versus public, right.
That does it for this edition of Bloomberg Tech. Tomorrow, we've got so many other guests coming on CES. Let's talk about them. Kindred Ventures, Joby Aviation's going to be joining us, and Jacob Hellberg, of course, a little bit of government perspective.
It's fun to be in Vegas. Recap. There is a lot to recap. Do it on the pod. You know where to find it. We keep going. This is Bloomberg Tech.